Because money moves, and money moves for a reason. Follow the money. 20 years ago, almost nobody was paying attention to this country. It wasn't famous for technology. It wasn't known for financial power. And it certainly wasn't one of the richest economies in Asia. Yet today, something remarkable is happening. Factories keep expanding. Ports keep getting busier. Exports continue to grow. And billions of dollars are quietly flowing into this country. Some of the world's largest companies are building here, hiring here, manufacturing here. The question is, why? Because countries do not become richer by accident. Money doesn't move without a reason. If global companies are investing billions, they are seeing something. Something the rest of the world may not have noticed yet. So let's follow the money. Our first clue comes from trade. Every year, millions of containers leave this country, filled with electronics, shoes, clothing, furniture, products that end up in homes all around the world. The second clue comes from people. A young workforce, new universities, technical education, a generation entering the economy at exactly the right time. The third clue comes from investment. Every year, global companies announce new factories, new industrial parks, new supply chains. The money keeps arriving. At this point, you might be thinking about India or Indonesia, perhaps Mexico, maybe Malaysia. All reasonable guesses. But none of them is the answer. The country that quietly became richer than most people think is somewhere else. And its story is only beginning. So, which country has been quietly changing the economic map of Asia? The answer is Vietnam. For many people, that may come as a surprise. Because when most people think about Vietnam, they think about its history, or tourism, or low-cost manufacturing. But today's Vietnam is becoming something very different. It has become one of the world's fastest-growing manufacturing economies. Walk into an electronics store almost anywhere in the world. There's a good chance that some of the products inside were assembled in Vietnam. Smartphones, wireless earbuds, computer components, consumer electronics. Many of the world's largest manufacturers have expanded their production inside the country. Samsung has made Vietnam one of its largest manufacturing bases. Apple suppliers, including companies such as Foxconn, Luxshare, and Gore-Tex, have expanded their operations there. Global brands, from Nike to Adidas, also manufacture a significant portion of their products in Vietnam. This transformation did not happen overnight. It took decades of investment, infrastructure, education, and integration into global trade. As factories expanded, so did exports. As exports increased, foreign investment continued to arrive. And as investment grew, new industrial parks, ports, highways, and cities followed. This is why the story of Vietnam is not simply about economic growth. It is a story about confidence. Because global companies do not invest billions of dollars unless they believe a country has a future. But this raises an even bigger question. Why Vietnam? Why did so much global capital choose this country instead of somewhere else? So, why Vietnam? Many people believe they already know the answer. Cheap labor. That explanation was once true. But today, it is no longer enough. If low wages were the only reason capital moved there, many other countries would have experienced the same success. They didn't. Because global companies are not only searching for lower costs, they are searching for reliability, efficiency, and long-term confidence. Vietnam offered something that became increasingly valuable: a young workforce. Every year, millions of people enter the labor market. Many of them trained in engineering, electronics, manufacturing, and technical skills. But people alone are not enough. Factories need roads, ports, power, reliable logistics. Over many years, Vietnam invested heavily in industrial zones, transportation, and export infrastructure. Then came another advantage: trade. Vietnam signed free trade agreements with many of the world's largest economies. These agreements made it easier for products made in Vietnam to reach global markets. For an international company, that matters. Because building a factory is only the beginning. Selling products to the world is the real business. Then something else changed. Global supply chains. For many years, companies concentrated a large share of manufacturing in a single country. But over time, they began asking a different question. What happens if one location is disrupted? The answer was not to leave China. The answer was to diversify. This strategy is often called China Plus One. Instead of relying on one manufacturing base, companies began building additional capacity elsewhere. Vietnam was ready, not because it was the cheapest, but because it had spent years building the conditions that global capital was looking for. This is the lesson many people miss. Countries rarely become richer because they are cheap. They become richer because they become competitive. And once global capital begins to trust a country, that momentum can become very difficult to stop. But every success story creates new challenges. Vietnam's rise was not only about what Vietnam did. It was also about what happened to the rest of the world. For many years, global manufacturing followed a simple model. Build where production is efficient. Scale as quickly as possible. And keep most of the supply chain in one place. That model helped companies reduce costs, but also created a hidden weakness. The more concentrated a supply chain became, the more vulnerable it became to disruption. Then, the world changed. The pandemic, shipping delays, geopolitical tensions, trade uncertainty. One after another, they reminded companies of a difficult lesson. Efficiency without resilience comes at a price. So global companies did not ask where production was cheapest. They asked where production could continue if the unexpected happened. This changed investment decisions around the world. Factories were no longer viewed as isolated buildings. They became part of a global network that needed flexibility. Vietnam was ready at exactly the right moment. Its ports connected manufacturers to global markets. Its industrial parks were expanding. Its workforce was growing. And international companies already had experience operating there. As investment accelerated, the names became familiar. Samsung expanded its manufacturing footprint. Apple suppliers continued investing in new facilities. Electronics, consumer products, and industrial components began flowing through Vietnam to customers around the world. This was not one company. It was not one industry. It was an entire ecosystem taking shape. And once an ecosystem forms, it attracts more suppliers, more logistics companies, more engineers, more investment. Success begins to reinforce itself. This is why Vietnam's story is bigger than Vietnam. It is a story about how global capital adapts when the world changes. But every economic miracle eventually reaches a turning point. Can Vietnam keep winning? Every economic success creates new challenges. And Vietnam is no exception. Rapid growth changes everything. The same factories that created jobs also increase the demand for electricity. The same cities that attracted investment must now support millions of workers with housing, transportation, and public services. Success creates pressure. As incomes rise, labor becomes more expensive. Workers expect higher wages. Living costs continue to increase. For international companies, this raises an important question. Can Vietnam remain competitive as it becomes richer? History suggests that every fast-growing economy eventually reaches this moment. Japan did. South Korea did. China did. The next stage is no longer about low-cost manufacturing. It is about moving up the value chain, building more advanced products, developing higher-skilled industries, creating more innovation. Vietnam has already begun that transition. Electronics, semiconductor investment, technology manufacturing, digital industries. These sectors may define the country's next chapter. But nothing is guaranteed. Global demand can slow. Trade policies can change. Competition never disappears. Other countries are also trying to attract the same investment. India, Indonesia, Mexico, and many others. Capital is always searching for its next opportunity, which means every country must continue to earn its place. Vietnam's greatest challenge is no longer how to attract global capital. It is how to keep it. Because investment doesn't stay where yesterday was successful. It stays where tomorrow looks promising. And that may be the hardest challenge of all. Vietnam's story is not only about Vietnam. It is a story about how nations become wealthier over time. Many people believe countries become rich because they discover something valuable. Oil, gold, natural resources. Sometimes That is true. But increasingly, the world's fastest growing economies are creating wealth in a different way. They attract investment. They educate their workforce. They build roads, ports, factories, power grids. And over time, those investments begin to transform an entire country. That transformation rarely happens overnight. It happens one factory at a time, one port at a time, one generation at a time. Vietnam is one example. Tomorrow, another country may begin the same journey. Because global capital is always moving, searching for stability, searching for talent, searching for opportunity. And wherever those conditions come together, investment follows. Before skylines change, investment arrives. Before incomes rise, factories are built. Before headlines appear, capital has already made its decision. That is why the biggest economic stories are often invisible at first. They begin quietly in industrial parks, in shipping ports, in classrooms, and in the confidence of people building for the future. The country that quietly became richer than you think was Vietnam. But the real story was never about one country. It was about where the world's money chose to go. Because before countries become rich, capital usually arrives first. Follow the money.